Altcoins can't seem to pump to save their lives. It seems we go one step forward and two steps backwards with every pump we have. But I'm not too concerned, and I don't really think that you should be either. Because based on the charts I'm going to show you in this video, you'll quickly realize that an altcoin bull run is still coming. It's just taking longer than expected. And hang tight, because I've got a little trick later on in the video that you need to be doing right now to take full advantage of where we are in this market. But first of all, because I haven't seen most of you guys for 2 weeks, I've been unfortunately extremely unwell. I've got to cover what's happening in the market, what we can basically expect in September. And then again, I'm going to go through in a bit of detail here some of the charts, metrics, and everything we've missed over the last 2 weeks to keep us up to speed and laser focused on the bigger picture. Many people, it seems, are caught up in day-to-day, week-to-week stuff where, again, it's crypto, right? Things move up and down very quickly. They're very emotional. So we want to see through that. We want to see the bigger picture here. And that is what my job is in this video. And of course, to start, we have to assess alt season. And the only way we can assess alt season is figuring out what Ethereum's doing. Now, if we have a look at Ethereum's monthly performance here on CoinGlass, we get a bit of an idea of historically how Ethereum's performed in each of the months in a single year. Now, you can see we're in September. Now, September, interestingly enough, if we go way back here to 2020, which is back over at this point, it was a negative month. And that's what I think is it's likely going to print this time around, considering July and August were both very bullish months, with July being the more bullish month than August, you can see here, which back in 2020 was the same, with July being much more bullish than August. And then again, you can see here, Q4 was actually, again, quite good. So I do think it'll be something similar. I do think we are much more akin to 2020 than we are in the 2021 cycle. The reason simply is, if you actually have a look just simply based on the monthly return chart here, the years prior to 2020, so 2019 and 2018 here, look far more similar to 2024 and 2023 than it would be us being in the 2021 year right now. So to cut a long story short, I've added, these sort of 3-month periods to Ethereum's chart based on where I think we are in the previous cycle, which was back over here. So the green periods is July and August. Again, overall, very green and positive, followed by a down September. And then, of course, moving into a very bullish Q4. And then, of course, an overall, I think, somewhat bullish, 2026. That's what I do think happens. I don't know if we go the whole entire full year of 2026, but I do think whatever comes after this year is likely going to be overall very, very bullish. And if we have a look at understanding this cycle much better, if we look at Ethereum Gold down here, it kind of gives us a more clear understanding of why I think that we are more akin to 2020 right now, not 2021. And the reason, again, is simply because you can see here with ETH versus gold, we were above the white line here, which was like the mid-cycle high, lower high, and then the breakout when we had the September crash, okay? And so we are kind of at that point right now. We've actually fallen beneath this line here. That's okay. Okay, I do think that's okay. But again, it's much more similar to this period back over here than it is to this period being in September 2021. That's just my 2 cents, of course. Everyone might have a different opinion. We can also see actually the fear and greed index back at this point in time as well in the previous cycle, which again, for those not really keeping up the speed, is where I think we are right now. You can see we did have a pullback here on the fear and greed to around the midpoint of a score of 50. Now, if you look at the MVRV, which is this colorful pattern down the bottom here, this looks at the average cost basis of Ethereum holders. So basically, when this goes into blue, that means most Ethereum holders are in extreme losses. When this goes into red and dark red, this means they are in extreme profit, which means with extreme profit, they're going to take some pretty extreme gains, which means that's what kind of helps pull markets down when everyone's taking a lot of profit at once. And so you can see here, it's actually struggled to break through this trend line here I've highlighted, just as it struggled to break through the dotted line over here. Finally, we broke above it, which is what I pointed out on a few videos ago. And we are now in the orange zone, which you can see here. It's also struggled to actually break and remain above. So what I'm eyeing off here is essentially a slight pullback for ETH to breathe, which is a good thing as holders take profit, but a consolidation nonetheless, allowing ETH to break through all-time highs and hopefully confidently remain above this orange zone and pushing it into the red and dark red. What does that mean? When it goes into the red and dark red, that means essentially we are in the blow off top moment. So keep your eyes on the MVRV because it literally tells you whether the average ETH holder is in significant profit. Now, just to further the point a little bit more around why I do think we are likely in the 2020 period here with the best to still come, not more like the end of 2021 where the best has already happened, is also looking at something like Bitcoin Gold, which is this chart right here. Not to spend all day talking about it, but like I mentioned again a few weeks ago, I kind of saw us, which is what I think is still happening right now, at the point where we were kind of at the very top of this little hump here. And what that meant was a pull down here in around September, followed by an eventual move upwards. And that's kind of played out here, okay? So again, these cycles look exactly the same, and I can show you this in 1 second here. But needless to say, again, we've kind of come out of the early box here, okay? We've kind of had this little top, and then we've sort of come back down yet again. So let me just show you how uncanny the resemblance is between this and this. Now, I'm not expecting us to just start pumping here crazy like this massive move here did, because those who were around in the last cycle know this massive move was artificial. It was because the US gave a whole bunch of stimulus checks, and they just printed a whole bunch of money basically, and everyone started spending that money on things like unnecessary goods and of course shitcoins like crypto, okay? And so that's why we pumped up. I do think what could possibly come here is kind of like a more gradual version of 2018 where we kind of just like trend upwards here over the course of time, and then eventually a sort of massive blow off top moment that comes very, very suddenly. The only difference this time around is it's just taken longer, okay? We had a massive 476-day period from the lows to getting into the descending channel here to what happened back here, which was 196 days. So we've pretty much added a good overall about 1 whole year to this cycle. I think the gist of what I'm trying to say here is that we likely have, an amazing bull run still ahead of us. It's just that we are going through like cycles right now. The market is just being the market, and we've likely had a whole 12 months added to this cycle in the early beginnings than what we had initially thought. And that's as we stand right now. Maybe this goes on for an extra 3 or 4 more months than we even thought. So who knows? Now, where I think we are, roughly speaking, right now is likely at this point over here, which was around August, September of 2020, like I pointed out, which is where we had this sort of like fake out for alt season. This is Bitcoin's dominance. Okay, then we had a push back up above the blue line, which is the 1 year moving average, and then a heavy drop into full-blown alt season. That came very quickly, guys. If you have a look at the time frame here, from the top to that immediate bottom was 140 days. So not even half a year. And so if that happens again this time around, we may see around December Bitcoin's dominance actually topping, which, by the way, might not mean altcoins really fall. It's all a dominance game. So altcoins could still relatively stay quite fine as long as the global market cap continues to increase. So we could have an increase here in Bitcoin's dominance, followed by a sudden crash over a 4 to 6 month period, causing alt season. This would work in well with the total 3 minus USDT over Bitcoin chart, which many people like Ben Cohen have pointed out the fact that we have to go down to the 0.2 flav zone in order to have alt seasons. What that means essentially is altcoins will bleed to Bitcoin for a very brief period, which may be kind of like what happened back over here. Again, August, September, we kind of had the top, then we came crashing down, bottomed here. So this time around, it could be like this. We could fall down to here and then blast off. If we have a look here at the others dominance versus Ethereum dominance chart, that's kind of like what happened when this chart bottomed, all right? So this chart here bottomed at the green circle at the exact same point that this bottomed over here. The short-term holder, MVRV, and Bollinger Bands right now show us that we are actually oversold. Okay, so this is a really, really good point because we don't really go oversold all that often. When short-term holders panic, that's actually a good sign for us because short-term holders usually indicate what the broader market is thinking. Most people are short-term holders. Most people are sort of the emotional investors. So we've had a massive pull down here. We had a massive pull down here, which was the tariff news and the Japan carry trade. All of these would have been fantastic buying opportunities. So again, a really, really good sign indeed. We can also see the Bollinger Bands as well. They are actually condensing, which, as many of you do know, usually then it precedes a massive move, okay, usually. Now, we can also have a look at the topping cloud price models here as well. Now, this is just simply the amount of top indicators that have signaled. You can see here, none have signaled, not even close to previous cycles. And you can just, of course, observe this on the coin market cap here. All X's across the board. I'm not so convinced we've topped. Looking at social risk here, we've got nowhere near, okay, previous cycle levels. And that tells me more than what you may think, because we've got many more people in this market. We've got so much more interest. The fact that broadly across YouTube and Twitter and so on, we haven't had even half, okay, of the interest in socials across crypto as the previous cycle tells me that we are nowhere near the top. We can also have a look over here as well at the CDD, which is coin days destroyed. Why this is important is because it has a look at the last time a massive whale moved their Bitcoin, okay? When they move their Bitcoin on chain, this particular indicator assumes that they've sold it. They might not have, but it assumes that, okay? So if they haven't moved their Bitcoin for a while and they move it, it flags. And you can see here we have signaled into the red the last 3 times we've kind of had large pumps. Now, it is important because, of course, this may be an indication that whales are moving their money or, again, at worst, selling off. So, yes, something to consider. I have noticed many other charts as well indicate to me that whales are selling, but not at rates in which we need to necessarily be concerned with, just enough to know that I believe we are entering the final phase or stage of the cycle. So, a few different things. One, what do I think will happen in September? Well, I think at best, possibly a neutral month. I do think we'll have some volatility here, especially because we do have the FOMC meeting coming up on the 19th, which means that there may be, again, some selling. There may even be some really good news, but we don't know just yet. I am expecting the worst, but that means that, am I buying? Am I, holding cash? What am I doing? Well, I'm doing a bit of both, okay? So on dips, I'm just simply going to buy. Guys, I can't stress enough, charts like this are so important, because if you zoom out and have a look at what most people are doing, i.e. short-term holders, it gives you a really good indication of whether you should be buying or not. Okay, you don't have to go all in, but just buy the dip if you have some cash. If you've got $1,000, non-financial advice, by the way, but if I had $1,000, all right, to invest, I might put in a couple $100 on this dip, 20%. I'd probably hold, 80% or so of that cash for the rest of September, considering I do think it'll be volatile and there's always going to be buying opportunities. But I definitely don't want to miss a decent buying opportunity when indicators like this are literally telling me the market's oversold. I would just continue to hoard cash, and on dips, just spread that capital into the market. The tip I wanted to share at the end here was pretty obvious for you experts, but I think for beginners, this is a must know. And it's stuff that I still fall for myself, because we're all human, and that is buying, dollar cost averaging, right? Now, I get it. You want to click off and go, okay, I know about dollar cost averaging, Kyron. Everyone tells me about DCAing. But I wanted to break it up into 2 different things here and just remind you all of what the facts are, all right? So, and by the way, I still, again, fall for this myself. I have to keep myself in check. Now, 2 things are catching a falling knife and timing the market, not trying to time the market. So they kind of work hand in hand. First of all, I want to talk about catching a falling knife. Now, when we're seeing these down days in the market, right, where altcoins bleed quite a lot here, what we tend to feel like is 1, panicked, and 2, we kind of want to just throw all of the cash we have on the sidelines in the market and say, hey, that's me all sorted, I bought the dip. But in most cases, and for me, it's 100% of the time, the dip keeps dipping, all right? The market keeps falling, and so you never want to just take all the money you have, the cash, and throw it into one or multiple coins and have no cash left over, because chances are you will have a better time to buy. And so when we're looking at catching a falling knife, what this means here is, if you look at SI, for example, catching the falling knife is trying to buy as we're seeing these massive red candles, right? So trying to literally time when we're going to see a reversal with nothing but pure hope and luck. What I would say is it's very, very simple, actually. You all have access to TradingView. You all have access to a free indicator here, which is the RSI. It's very simple. In my personal opinion, you just simply want to buy when the RSI goes to this line right here, which is a score of 30 or lower, which is oversold. It's been oversold, right? Now, there's a good chance on SI here where we see something like this, which is oversold, but we kind of have a rebound and then, it just keeps going further and further. But this is where point 2 comes in, which is time in the market, not trying to time the market. So you're not trying to get the exact bottom of the move. And if you are, you're crazy. It's just impossible to really do, okay? Unless you get lucky. So over here, buying on, the 5th of August, you may have got lucky and bought SI at 19 cents when everyone else was buying SI higher than that at the time. Okay, but if you look at the RSI here, if you bought here, maybe even if you bought this, okay, not too bad at all. You bought over here, okay, not too bad at all. You bought here, you would have had on average a really good entry level, okay? So not throwing your entire portfolio in the market or in SI when it goes to here because it's significantly oversold. What you've done is you've, of course, brought your average down and down and down to the point where, okay, you don't have the lowest average buy. You don't average in at 22 cents. Maybe you're averaged in at around 33 cents, but it damn well beats, being averaged at 46 cents. And because the market right now is still trying to find its way, like I said, alt season might be a few more months out. I know how many times I've heard that, or it might even be 6 months out, whatever. We still have massive moves ahead of us. And so a quality coin like SI, this might go up a 10x from this point in time here. It's not that big of a deal to get 33 cents versus 20 cents, for example, unless you're looking for like a 20x. In that case, every cent does count. But the most important thing, guys, is just simply patience. What ruins most investors is when you get impatient and, like I said, you just go all in, at once when you think that, hey, this is the time we have alt season. This is the 1 in 1 million chance that we actually just simply go parabolic. It'll happen eventually, but it's a very small chance that you actually time the exact moment when we do go parabolic. So, with that being said, I thank you all for watching to the end of this video. If you've made it this far, drop a like down below. It'll help cure my sickness. Trust me, it will. And I look forward to seeing you guys tomorrow. Take care. Bye-bye.